What's up, guys? Thank you for joining me today. I wanted to go over one or two things with you today, but the purpose of today's video, the reason why we're here is because I want to share with you how real estate actually creates millionaires. We hear it all the time. Like with everything going on in the world, oil went to 100, then went down to 86. It lost like 36% of its value overnight and shot back up. Like these are the things that I want you to kind of pay attention to. Don't get distracted. Your goal here is to create wealth for you and your family. That's why I always say real estate, multifamily, income producing real estate is the best asset class because you don't have to deal with that craziness. No matter what happened last week, people still showed up and paid their rent. They went to work, they did their jobs, and they will continue to invest in their place where they live. And if you're an investor, whether you own real estate or you're a passive investor in real estate, you will continue to get the benefits of that. So, things I want to go over with you today. Number one, and I wrote them down so I don't get long. How do you, whether you own real estate or you want to invest in real estate, you're going to do real estate, multifamily real estate, how does multifamily real estate actually make multimillionaires? We've all heard it. 90% of millionaires in the United States or in the world put their money into real estate, typically multifamily real estate and or housing. Now, the other piece to that I like to talk about is almost 100% of billionaires are in private equity or hedge funds. What does that mean? At some point, you need to invest in private equity, which is what we do, private equity real estate at Bell Capital, or you need to be the owner of the real estate themselves. Both of them will make you wealthy. But what I want to go over with you guys today was how does it make you wealthy? All right. So the number one thing I want to go over with you guys is real estate, multifamily real estate protects capital. You guys all know Warren Buffett, the Oracle. You guys have heard me say this over and over. My team hears me say it over and over again. The number one rule in investing is don't lose money. Period. End of story. Warren Buffett says it. Steve Schwarzman from Blackstone says it. Like it has just been the rule of the game. Don't lose money. And the number one rule of that rule, the number one rule of investing is don't forget rule number one, which is don't lose money. So multifamily real estate actually protects your capital. Leaving your money liquid in the bank does not protect your capital. We just saw that. If you are in money market accounts, ETFs, yeah, EFTs or whatever, electronic fund trading. You guys know I don't do stocks. I'm a real estate guy. But if your money went down at some point, if it's tethered to the stock market or Wall Street or something, like you don't have those high crazy ups and downs. So there is a protection of your capital if it's in something like real estate. And that's why real estate makes multimillionaires. Next, um, it actually has passive income. You want to look at passive income. It should continue to provide income. If it's an income producing real estate deal, it should provide passive income to you if you're passive, or it should provide some type of income for you, even if you're active, but at least you can count on it, right? So the other piece is it provides passive income. Next, it provides, this is really the big one. Everyone even me, I talk about cash flow, but the name of the game in multifamily, I'm talking about institutional quality big deals, is really not cash flow. Cash flow is the drip. The name of this game, why it really creates multimillionaires, is because you can control appreciation. All right. So control appreciation means I can increase the income of that property, the revenue of the property, whether that's rent, whether it's additional income, whatever. I already know that if we're able to do that, whether that's inflation going up by 3% in our increases of just cost of goods, basically income and rent and all that stuff, or we force it. We make the building nice. We take care of our residents and our tenants. We are buying a good location. We can raise the income of that property. We automatically control the value of that property, which is appreciation. All right. And if you guys have questions, leave them. Leave them in the comments. If you're watching this live, I would love to hear from you guys. Do not miss out on the opportunity to connect. I'm here to connect with you, which is why I wanted to share this. And the reason why I'm sharing this is because, like I said, how does real estate actually create multimillionaires? This is how, guys. This is how. So the next thing is there's the tax write-offs. People who make millions of dollars look for tax write-offs. And multifamily real estate, the tax code is almost feels like it's written for it. Like this the game. You're providing housing. It's a real asset. You get the tax benefits of being able to do that. You can 1031 out of it. You get the write-offs from the interest payments that you're making. You get to do cost segregation, which means you actually go and you look at the property, you bring in a company that does cost seg. They go over the property, and that way you can do what's called bonus depreciation. You can accelerate what would have taken spread out over 27 years can be done in year one. And you can take that written loss or the write-offs of that property right now spread out over the income that you make on the deal. So again, Talk to your tax professional, talk to your advisor, your CPA, all these people. I'm just telling you, this is how millionaires are made using real estate. All right, next. You can tell I'm excited today. I'm excited today for you guys. So the next thing is what do I have written here? Leverage. Leverage a good debt. People actually get this wrong. The leverage, meaning like I know your mommy and your daddy was like, don't get into debt. And if you get debt, pay everything off. They aren't talking about leverage of good debt of multifamily real estate. This really is the billionaire maker that everybody's talking about, that everybody's actually in private equity and hedge funds, because there's leverage associated in the deals. For example, if like for Bell Capital, we raise money, we have a private equity fund, right? So we have fund one. So let's say we take all of us put our money together. We have money in our fund. Let's say we have $40 million. That $40 million should afford us the opportunity to buy a 40 million. Let's just say we can buy a 1.2, I'm sorry, $120 million deal. For all you people out there want to do small deals, for you do 400 grand cash, you can probably buy a 1.2 million dollar deal. Anyways, $120 million deal with good leverage, right? Because $120 million, we're going to borrow 60% of that, and then we're going to use our cash, which is the fund, to be able to fund the rest of it. That's called good leverage, because on that situation, $40 million really buys what? $120 million asset that cash flows. So the residents, the tenants taking care of the property, they're the ones that are going to pay the debt. That's why I said it's good leverage with good debt, right? That's how millionaires are made. That's why they use real estate, because this is the one asset class that every other lender out there loves, just loves it. All right. So next, where are we at? So tax advantages, write-offs, got it. Oh, it creates generational wealth. Let's say, for example, you buy a multifamily property, or you invest in a multifamily property. If you're investing in the fund, we're going to be like, hey, if something were to happen to you, where do you want us to send this money? It carries on with you. You can actually direct that money to the next generation. If you're an owner, you can put that property in some type of entity, and you can say, if I pass to my demise, I'm going to get a life insurance policy. It's going to pay off the current debt, and we're going to actually go ahead and have the rest of the cash flow transferred over to my heirs. However, you're going to set that up, but you can do generational wealth with that. Now, you can do it with stocks and blah, blah, blah. But if you pay attention to what's going on in the world, you may leave some what you think are assets, some portfolio to your family that can go up and down, and your family can't do anything. You can't dictate this. Like we said, real estate, you can actually do something with your real estate. You can control the level of appreciation, which can get passed on to your family. All right. Next, most people don't count this as a way that millionaires use real estate and how it creates millions of dollars. But what it does do for most people don't count this as a benefit, but it's an illiquid investment, meaning you're going to put your money into this deal and it's going to be there 5 years, 3 years, 7 years, 10 years, 20 years, 100 years, right? It's an illiquid asset. If you move your cash that is trash sitting in a bank account, almost earning you nothing, going up and down in value every day based on inflation, and you put it in a piece of real estate, it is an illiquid investment. You can't just press a button today and have it be gone like most people. It just doesn't happen like that. These things trade based on time. Because it's illiquid, it's actually a benefit, which is how it creates multimillionaires. Because if you have that money sitting in an asset, you can't sell it fast. There you go. It's more of an asset to a bank, a lender, or anybody. All right. Next we have, it's an inflation hedge, which is what I was talking about earlier. Like the value of real assets actually goes up in an inflationary period. So you can count on your building going up based on the cost of to operate it, the cost of materials. If it's bricks and sticks and stone and steel, all of that stuff gets more costly to make as inflation goes up. So the value of your property goes up. It happens every time. So you want to be in real assets during inflationary periods, or real assets during the time when there's no inflation, because at least you know where your money is and not sitting in the bank. All right. And then next, it's not easily destroyed. Just like I said, we're pressing a button and it being illiquid, you can't just get your money out and sell it or trade it. Maybe later, people are starting to tokenize real estate, right? So you can do that. But right now, it's not easily destroyed. People will always need housing. Think about it. If you go to the Vatican, the Vatican City, you have what, the Sistine Chapel. I always say it jacked up. That thing has been there for 2,000 years. This is always going to be around. Like it's not easily destroyed. An apartment, let's say you look at a 200 unit apartment building like the one we looked at. It was 230 units. It's downtown San Diego, beautiful property, great location. It's on two different sites. It's massive. You have to literally get a golf cart to drive around that thing or cross the street or walk around with walkie-talkies. You got to call on your cell phone to the leasing office. Like there's nothing that's just going to come and wipe that thing out. It's not easily destroyed as an investment vehicle. It takes time. Like you need trucks, you need a permit, you got to do something. It's not like a stock or like this stuff where gold goes down. It does. Silver went down. It does. Bitcoin went down. It does. Oil went down. It does. This doesn't happen like that because it can't just be destroyed based on a headline. It can't just be destroyed based on somebody saying, "Hey, we're going to do this," and all of a sudden people get scared and they dump their money out. So it's important to know that real estate, you're going to make millions of dollars, and this is how it actually pays you guys, right? So I know I get excited. I talk fast and I talk loud, and I'm like, I know everyone don't like that, but here's the deal: just being me, and you got to get excited about something. If you're going to get excited about something, get excited about making millions of dollars in an asset class that we can all understand. All right. So next, it's easy to scale, meaning this: you can buy one property with one tenant, one roof, or you can buy one property with 100 tenants and multiple roofs under one address. You can easily scale that thing. You may not be able to easily scale a business. I was talking to my buddy about this, and we were talking about buying businesses versus buying real estate. And we were talking about scale in buying acquisitions and businesses. Yeah, you can buy a bunch of businesses and bolt them all together and sell them on a spreadsheet in hopes of private equity, or you can buy one 400 unit apartment building and there's your diversification, there's your scale. Boom, just like that. And we're not talking about just buying the building. If we're talking about scale, you're buying customers, you're buying professionals, you're buying a management company, you're buying everything all in one pot. You might not be able to do that with a business. You can. You can. I'm just a real estate guy. Don't shoot the messenger. Anyways, last but not least, it's been proven over time. I just talked about that when I talked about the Vatican City. There's probably a property in your market that you can say right now, you drove by it. It has some historic designation on it. It was built in the 1800s and it's still there. And people pay money to go and walk around and look at art. They go around and look at the artistry, the architecture. It's a museum. It's a church. It's an apartment building that was built in the 20s. Whatever. That thing is still kicking out money. What does that mean? These things are proven over time to continue to make millionaire after billionaire. It depends on whether you can own them. So I wanted to share this with you guys today, especially with what's going on in the world. Oh, it's frozen. That thing right there always freezes. Don't worry about it, guys. The thing I wanted to tell you guys is this: real estate itself. If you want to know how to make millions of dollars and how real estate makes millions of dollars, multifamily real estate, this is how. You have to remember once and for all that real estate is going to be your game. If you want it to be your game, let it be your game. A little napkin, my little handkerchief's falling. If you want real estate to be your game, let this be your game. If you want to do stocks, do stocks. If you want to do bonds, you want to do gold, you want to do Bitcoin, whatever. But find out where you want your family's money and then make a decision that where your family's money is can create millionaires, multimillionaire generational wealth for you and your family. If you're a doctor, you're a dentist, you got to practice. You can only pull teeth and inject fluid in somebody's gums or put metal inside of their mouth, or if you're a chiropractor, push on somebody's lower back for so long before you're like, you know what, I'm good. Real estate's going to be your way to go, right? Period. You don't need two businesses. You don't need to, yeah, go for it. Buy a couple more businesses, double down on your equipment, grow your practice. But the money that you have sitting in your 401k or your IRA retirement account, move that money over. Or if you have a bunch of money sitting in the bank earning nothing on your money, move that money over into real estate. Put it with somebody who knows what they're doing, right? This is how you're going to create millions of dollars for your future for you. All right. So I hope this helps. Like this video, share this video, comment on this video, give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time because I love you both. But I appreciate you guys. And whatever you guys think, put it in the comments here. I want to know what you guys think. Where's the place? Let's do this. Where's the place that you feel like, well, from the list that I gave you guys, that's where you want to focus on? Dude, you know passive income, or you know capital preservation, or you want appreciation on your money. You want to be able to put your money in a place 10 years, 20 years, 5 years, look back, and you've doubled, tripled, quadrupled your money, and you didn't do nothing for it. You just let it wait. Let me know which one that is for you. All right. So let me know if you guys need anything. Let's get after it today. Boom.